Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 24th of February, 2022. This is episode number 2178. The headline, as you already know, is a Russian incursion into Ukraine. Um, this has been warned about by U.S. intelligence services for a while now, since last week. There have been multiple warnings that this is likely to happen. There have been multiple warnings from the current administration to the president of Ukraine and so on. And here we are. A little bit of a textbook move for Putin. I won't get into the politics of this, but this is very significant, of course, for Europe. And of course, I want to express my sorrow for those who are involved in this, for those whose lives, property, and their own physical being is likely to be interrupted by another politician's moves. So, hopefully, I'd like to say our thoughts and prayers are with you, but you already know that, and also wish we could do more. So. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. One thing I want to say to traders today, and I would say this to my prop traders as we huddle up for our morning meeting, is don't gloat your wins publicly. Again, there are people in harm's way here. Let's be considerate of the fact that this is not something that's funny, and it's not something that we celebrate. There will be a lot of volatility. There will be a lot of moves. There will be a lot of money to be made and lost as a part of this. So keep your cheers and stuff to yourself. Focus on trading the markets. The other thing I want to point out is that there is extremely high event risk here. There's likely to be more surprises. There's likely to be a lot of noise. So this is a great day, as I just wrote in the Convergent Trading Head Trader channel, warning Convergent members that this is a great day to shut down the news. I said, note, the amount of noise today will be deafening. There will be a lot of opinions on what will happen, how the U.S. will respond, what the Fed or ECB will do, doomsday scenarios, etc., etc., etc. I suggest you shut off your TV and Twitter and whatever else and focus on price. Price says it all, and volume gives you how much of that price is important to participants. So there's going to be a whole lot of opinions here, mostly uneducated, mostly uninformed, mostly from sources whose profitability you know nothing about. And so just shut it down. The additional thing I want to say is it is advisable not to trade. Again, this is in the Head Trader channel on Convergent Trading. It is advisable not to trade if you're not seeing what the market's trying to do, or if you feel nervous or anxious as a result of these events. There will be another day for you to trade. If anything, switch to sim trading and follow your plan to see how it holds up in a geopolitical shock event. Okay? So, warning to all, it's not necessary for you to trade today. The risk posture this morning is strong risk off, as strong as we've seen it in a while. Europe's off almost 5%. The German DAX taking a bit of a beating. The German finance minister just came out and said that there is no way to avoid an impact on the German economy. Gas is still flowing into Europe from Russia, so Europe's still receiving gas from Russia. The time of year necessitates that. And I'm seeing also like tweets about how in the last so many days of warnings against Russia, Russia has made 700 million or $1 billion in oil and gas sales to the West, to the same countries that are talking about sanctioning. And it's clear that those people don't understand that there are contracts in place, that this is a foregone conclusion. Sanctions do not stop things that have already been sold. So, there's just, my point being, there's just a ton of noise, and just be selective about what you follow or what you look at today. So, strong risk off. We did have key earnings. Alibaba, Anheuser-Busch, and Ambev as the key players. Before the market open, after the close, we have Dell Technologies, Occidental Petroleum, Block, Intuit, and others and others. In terms of, I'm a bit of a perfectionist, and I don't like seeing things that are not right. Um, the other things we have to pay attention to this morning is, as if it wasn't important, GDP came out this morning. It was in line, 7% versus 7% expected. Initial jobless claims came in better at 232,000 versus 235,000. And GDP price index Q on Q came in worse than expected at 7.2% versus 6.9%. We're looking for new home sales. New home sales of the expectation is 860,000 units. Then we have also on schedule a meeting with the ECB, an off-the-record meeting with the ECB. There's likely to be a Fed meeting of some sort over the next few days. The 50 basis point probability has just come off the table from March. It is very likely to be 25 basis points. The market does not have stimulus underneath it. Currently, the market will experience a buy shock if the Fed comes in and says that it is stopping its taper and it's stopping its increase in interest rates. This will buoy prices. Another really important day to keep factual news turned on, and everything else, opinions, editorials, and all that stuff turned off. We do get crude oil inventories today, crude oil stock change, and gasoline at 11 o'clock instead of 10:30 yesterday because of the holiday on Monday, President's Day. ECB Schnabel speaking at 11. And we have Fed's Bostic and Metzler at 11, 10, and 12 Eastern. Fed's Waller at 8 p.m. this evening. There is a Security Council meeting convened by Biden, in which they will assess their next moves. There have been Russian strikes on what they say are military targets. They're saying they're conducting a surgical campaign, but there have been strikes into Kyiv and other major cities, which is troubling, and that's what's causing the market to have serious jitters. Moving into the separatist areas is one thing. Lobbing missiles into the capital of Ukraine is entirely another issue, and that's why the market responded very aggressively on the start of that at 9 p.m. Central, 10 p.m. Eastern. And so that's where we stand this morning. The S&P has traded a lot. It has traded heavy this morning, 824,000 contracts in a double distribution profile. We are 100% inventory is short. The range is already 122.75 points. Point of control of 41.20. We've traded quite a bit of 41.20. I want to remind you that 41.29 is the MC point of control in this area from April to June of last year. There was a huge consolidation here between 4,400 and I forget 4,205, something like that. And the point of control of this region is at 41.29, with the overnight point of control 41.20. At 4,000, we do have a gap, a really clear and prominent low volume node there. That's the key test area below. That's approximately 125 points away. We're expecting about 120 points for the day session today, in addition to what we had, overlapping what we had in the overnight session. The last time we had this much range, we ended up with about 158 to 160 points for the entire session, with about 125 in the overnight session. and about 124 in the day session. So there's a lot of volatility, a lot of volume, and a lot of movement going on. You notice that crude oil is taking its biggest leap up in a long time. Very clear the reasons behind that. Crude has actually come off. It has pushed through 100 and has pulled back slightly. Crude responding to the fact that sanctions against Russia are likely to take that supply off the table, pushing the equilibrium price of crude above $100. The secondary play to crude and the energy stocks is Iran. There's a lot more pressure now to get the Iran agreement back on the table. This agreement was made by the Obama administration and pulled back by the Trump administration. And they're looking to bring Iran into the fold, and that supply could really put a dent into Russian supply as the sanctions are in place. So there's a lot of pressure on that team to get that deal in place so that Iran can get nuclear power if it wants without having the capacity to build nuclear weapons, to concentrate uranium and so on to nuclear grade. So that's where that stands. Gold is responding, but not that much. Gold is only up about, I think, 7%. 7% or so for the year. It's not really responding the way you would expect. The bonds, of course, way up. The bonds way up. 10-year notes way up. The Bund is way up. So markets running to safety, and so on. Multiple countries, Australia, the United States, I believe Norway, are releasing oil from talking about releasing oil from their strategic reserves, but that's not even close. That's nowhere near what Russia produces on a daily basis. Pulling from strategic reserves isn't going to make up for the continuous flow of oil from the ground from Russia, which is a huge exporter. So that's where that stands. Crypto is getting hammered. Both ETH and Bitcoin are way off. The dollar is quite strong. Again, flight to safety. This is the recap for today. Let's take a look. Look, I don't want to spend much time doing a review. It's already 8:13. I want to get going on what we had yesterday, what needs to happen. I want to remind you that 35 yesterday saw a huge amount of trading at an iceberg, which translated down to 42.30, which then translated down to 42.25 on the close. A lot of volume, multi-distribution profile. This is a trend day profile with a close at the lows with the shift of the point of control to the low end of the range yesterday. This is a market that is saying it cannot find buyers. Buyers did try to make several attempts to push higher, shut off by the mid. The mid and the VWAP have been solid lately. Once we accelerated away from the mid and the VWAP, it became really difficult to find spots to enter that were not breakout spots. So even this morning, if you look, we broke down on the announcement of Russia moving into Ukraine, images and videos of Russian troop movers crossing into the Ukraine border and so on. That caused a quick move down. And then we pushed to where we are now, where the point of control is at 41.20. We've been consolidating and we pulled back to where the full session mid. So the full session mid here, let's go back. Full session mid here, okay? And it's just a kind of a constant thing that we see. The mid has always been a solid measurement for me in terms of a market generated over underline that adjusts with price. And when prices get above the mid, I start to question the ability of sellers to keep prices down. It puts me into neutral territory. If the mid is held on a retest from above, then I become more bullish and look for a squeeze on the shorts. We'll see what happens today. We do have a weak low here. We do have a weak low. It's a slightly higher low, but it's a relatively weak low. The point of control is at the low end of the range, and there's just no good news to play with here. So I'm expecting that the market might see the point of buying the dip here as we are in that consolidation range. Let me show you that. So this is a weekly chart. This is a weekly chart, and we are, hang on, it's better for me to go to the daily. And I'll show you that we are in this consolidation range right here. We have a gap above 4,000, and we consolidated quite a bit here in April and June through June of last year. This range right here, and we are playing in this area right now between 4205 and 4,000. Okay, we're currently at 4122 right in here, and 29 being the MC point of control of this region. This is where we are. This, they're saying this is going into bear territory, and I don't listen to any of that nonsense. Look at price, look at volume. Where's the market trading, and how's it doing as it's trading those prices? So let's clean this up a little bit, and we'll see that there's quite a bit of, it's hard to see it here, but the points of control, you can see the points of control, a lot of overlap, a lot of overlap. There's a ton of balance in this particular region here. So I'm expecting this to dampen. Remember, if you have been with me since 2008 or 2010, when I did the webinar series for charity on volume profiling, when I really started to bring volume profiling to the market, I talked about how high volume areas are, the analogy I used was a golf ball. You hit the golf ball, and when it goes into an MC point of control or high volume area, it's like a golf ball going into the rough, going into tall grass. It has it gets absorbed, the energy gets absorbed, and it has a hard time bouncing out, versus a low volume node area or a thin area where it's like a golf ball that bounces off the fairway, or even better, it bounces off the concrete or the paved path where a golf cart's supposed to drive around on. It retains its energy, and it's likely to bounce away in one direction or another right off of that. So think of this area as the tall grass. This area is likely to have a dampening effect. This is technical only. It's not geopolitical or macro in view. I'm just looking at price and volume. Looking at price and volume, this area here is tall grass. It is likely to absorb a lot of the selling that's likely to come in. I think because this movement occurred overnight, it is likely to get dampened as the U.S. market opens. There are reasons to get long here. There are reasons to liquidate. We've seen a lot of liquidation in the day session. We've seen a lot of sell icebergs yesterday. As I said, 35.30, 25.20 into the close were iceberg sellers for thousands and thousands of contracts. So this is important to recognize that despite the huge amount of noise and the anxiety this move by Russia is producing, we are coming into balance. We are coming into the next layer of balance. Again, between 4,200 and 4,000. That's a very wide range, with 4129 being the point of control. Okay, so very important to monitor that. In addition, I'm going to switch to Edge Pro X here for a second and go into the overview chart just so that we can get the bigger picture. So we have even more separation from our monthly VWAP. The bands on this monthly VWAP, I don't use standard deviations around a monthly VWAP. That's probably a legit thing to look at, but I don't look at it. I don't see the bands. I don't use the bands, but this movement away from the monthly VWAP is relatively stretched. It can keep going, but it is we're likely to see it basing at some point here. This is the high volume that I'm talking about. the tall grass, so to speak, and we're in the middle of it. So be careful selling aggressively into this. We're seeing this across the board. The Russell, which is expected to be the quickest to respond to crises, is has responded, but it's not really moving away as far as the others in terms of its monthly VWAP because it's already weak on its monthly VWAP versus the others. Gold has left its monthly VWAP way behind. Silver, the same, and then we have the bonds finally making a true reversal here, finally reversing back up. This is interesting. It's putting pressure on yields, which again takes that 50 basis point possibility off the table. Same thing with the 10-year. Crude running away, but crude is not likely to sustain this move. There's just too much interest in crude coming back in line, and governments are going to do what it takes in order to bring it back into line. The euro is really taking a beating, as you would imagine, the currency for the Eurozone falling in value. This is where everything stands. I'm not doing the scenarios for today because, I mean, I would be lying to you if I said that I knew what's likely to happen. I do have my prices mapped out. Convergent members have the map. I'll show you briefly what I have. The magnet in the area is right here at 4156 down into the 4150. That's the big magnet in the area. That's this high volume node. There's another magnet at the MC point of control, but we are at it. The magnet upwards is between 50 and 56. The over under is the last swing low, 4212 below. We're quite bearish above. We're starting to get bullish. That's way up there. And then support, key support in the area is anticipated around 4050. 4050 is the key support zone down here. Again, I'm not going to map out what I'm expecting for today, but I know the prices that I'm going to be participating in the form of stock zones here, these gray bands, and I'll just leave you with that. Good luck today, and I'll catch you tomorrow morning. It's all about risk management. It's what separates the people who survive and come here tomorrow and who don't. So recognize when you're not in your game and stay away if you don't see what you're supposed to do. Good luck.